Welcome to stockmarketfunding.com. We have a huge gap down on a Thursday morning on options expiration. And basically what we did was we came over here on the $480 call and started scaling in down here, right around in this area. They're $760 by $8. And down below here is the Google chart. And we're going to put these contracts out to sell at $10.50, because if we can get a big late day short cover breakout, these contracts will go up in value. The reason why I say that is that the prints are currently, because of the grease and the big gap down, you can see here on the opening bell as well that we're 200 points down. And we are below the 200-day moving average on the S&P. And this is a big haircut on the opening bell. And what we're looking for is how stocks put in a knife hook bottom, and the indexes eventually put a knife hook bottom. And then what will end up happening is that the short covers will come in and or buyers will step in, and we see big moves off of those bottoms. And this is how they happen. And basically we got good entries down here so far for what that big gap down in Google is about. And we're going to stay the course on those calls. Here is the gap down. Did it have anything to do with the equity? That's the gap down to the low there, the first low. This is the attempted bottom. Same thing up here. Apple Computer is right here. And here's the big gap down on Apple on the opening bell. And just remember that we got hit right there. I had some traders hit that in our mathematical platform and bounce that thing right up. And once again, what we're looking for is we're going to be, we taught people, if you go back to April 24th and you take a look at all the indexes, we said they were going to come down hard. But now we're going to be talking about how markets put in lows. And basically the stocks, all right, what I'm going to tell people to do is they're going to have to hold that gap down pivot line for right now. Here's the Google chart. Here's the Apple chart. And basically we're going to see if we can hold is that stockmarketfunding.com is back. Here is the Dow. Big gap down. What we're looking for, if you take a look at this Google chart below the Dow, you're going to see everything across the board. And what we do at Stock Market Funding is we got mathematical equations, whether you want to believe it or not. But I'm telling you, they work. Now, if you take a look at where the Dow is on the opening bell, you take that low, that gap down low. And over here is that Google is the same thing, and so is Apple. But what I want people to realize is that there are, we have a formula about stocks or indexes, is that if this Dow 3-minute gap down is that you're going to come all the way back up here off of the bottom. And when markets are going to put in a bottom, there's one thing that must occur, is that negative gap down turns into a positive move. They always start with the big volatility gap down on the open on the Dow, and then they have to run back up. And then the short sellers would buy to cover, and equities would run off of their lows, providing you got good equities. Now, First Solar's bounced $2 off the low. But what I want to teach you is one of the ingredients about making a market low is the big move off of that big gap down is that it comes running up hard. And, you know, we've already got somewhat of a bounce, about 30, 40 points. And same thing in the NASDAQ 100, S&P. And then if that happens here on the indexes, what else will happen is this right here. This VXN chart, which equals the NASDAQ 100, it gapped all the way up. It went from 35. This is the fear indicator. It was at 35. We went up and made a new high. The first capitulation high was only, well, it'll tell you. It was only right over here. And we are right back up above there on capitulation day that people thought was so funny. Well, it ain't so funny, is it? And the thing about it is, if this indicator goes down, then this Dow goes up. I will show one on the VIX. Which is right here. This is the VIX.X. These are the fear indicators. When this rolls down, that breakout will happen on those equities. Okay? And this is what we're going to be looking for. The other fear indicator is this one right here. The VXN. And this is your big gap up to 42. Remember, people, when I taught you on my videotapes on stockmarketfunding.com, the indicators were clear down at 16. This is the fear indicator. The fear is in the market. When this comes down, this is a big engulfing bar on the open. When we see that come down, then the indexes bounce off their lows. You're seeing it here. Now, before you. But we're only open for 20 minutes. There's a lot more to go through. And if this comes down, that means that these indexes will pop. This is the fear indicator. A couple of weeks, I did the VIX and I did the VXN when they were down at 16 and that there was going to be a big pop, and we bought calls on this, and we making a lot of money to hedge any downside that would be coming. And the gift is there.